real estate is the perfect avenue to launder money. It is done slowly, methodically, using a variety of different tools. And in this particular scenario, you might get organized crime groups, other fraud threat actors that need to launder money from other criminal activities, such as it could be fentanyl distribution, it could be sex-based human trafficking, racketeering, illegal betting networks, and get that cash and then filter it into the system by whether it's a straw buyer, someone that's posing as a buyer, or a false identity, or actually real people. And they can grab that illegal cash, make down payments, and actually set up a mortgage where they're paying, every 2 weeks or weekly or whatever their mortgage is, and then hold on to that property for a period of time. In essence, getting that money, starting to make mortgage payments with that illegal money, making a down payment that's accepted by the lender, and 3 or 4 years down the road, the threat actors sell the house. All the money's been laundered. They might realize a profit, and that money is free to reinvest in their criminal enterprise.
Hello, everyone, and welcome to Inside Policy Talks, Macdonald-Laurier Institute's in-house public policy podcast. With us today, we have Cameron Field. Cameron is a financial crime expert and former police officer specializing in anti-money laundering and fraud investigations. Cameron has extensive experience working with regulatory agencies, law enforcement, and financial institutions to combat financial crime. We're very grateful he did a paper for us, Fighting Mortgage Fraud in Canada, delving into the state of mortgage fraud and the urgent need for policy action. Cameron, welcome to the show.
Thanks so much, Peter. Thrilled to be here.
That's great. Let's dive right in. I think it's fair to say this is it's flying under the radar, this issue. And of course, there's a connection to the housing phenomenon, which we have both an affordability and a supply issue regarding. So we're going to talk about all these sorts of things, but just start by giving us an overview. What's the current state of mortgage fraud in Canada? How serious is the issue in terms of its scale and impact?
Yeah, so mortgage fraud is actually a very significant and very impactful phenomenon in the Canadian economy, and more importantly, in everyday Canadians' lives. There's a lot of impacts of mortgage fraud in Canada. For one, and we're going to dive deeper into this over the next while, but we have three different types. We have mortgage fraud for shelter, where people are committing fraud by misrepresenting things to simply obtain a mortgage. We have mortgage fraud for profit, where we see actors within the mortgage obtaining process that want to see things to fruition. And we also have mortgage fraud for money laundering. And that's the part that actually is fairly significant, in that we see a lot of threat actors, state-sponsored threat actors, and in fact, state actors operating in Canada that need to launder money for various activities. In terms of quantifying mortgage fraud in Canada, that's a very difficult thing. To come up with a number would be a bit of a unicorn. But if you look at overall fraud stats in Canada, I think since 2001, Canadians have reported just over $2 billion of fraud. Last year alone was over $600 million. And what's a little startling about these statistics, and that they're provided by the Canadian Anti-Fraud Center, is that they suspect Canadians are only reporting 5 to 10% of all fraud. There are lousy mechanisms to report mortgage fraud. It's not something that a customer is going to do. It's not something that the facilitators are going to do. And we're talking mortgage brokers, mortgage agents, and also the gatekeepers, law firms, and things like that. But in terms of mortgage fraud, it is such an integral piece of what we're seeing as a somewhat of a vicious cycle, because we do have a housing shortage. We see market costs going up and up and up. COVID was just a nasty piece of business, in that our construction industry was severely hampered by the pandemic, but we were still having an influx of immigrants, and people still needed housing. And then really the obtaining of mortgage became a very remote thing. We didn't see as many people in person, which also enabled fraud to occur. But putting that all into place with all these other related and connected issues, it remains a very significant problem for Canada.
Hmm. Very good. Let's unpack this a bit. So there are those three types. Maybe you could give us examples of each, and then do I have it right in thinking that the third type, connection to money laundering, is perhaps the most significant and the one being leveraged by organized crime and foreign state actors, like you say.
So we'll start from mortgage fraud for shelter, and this is where people in that vicious market, where market values have gone up. If people are buying an existing house, there might be multiple offers. If they're buying a new build, there might be lineups like 3 or 4 blocks long for just a select few new releases by a builder, what have you. Just by volume and velocity of buyers, cost. If a potential home buyer does get into that spot where they can put in an offer and go get qualified financially, there's a real push that they don't lose this opportunity. So it might be something as simple as altering income letters. Maybe someone is supporting giving them a cash grant of some kind, um, uh, co-signing, leveraging things that they have, but just in general, falsifying documents, employment letters that they in fact have a full-time job, not a contract job. This is their income, when in fact those documents might not be valid. And it's what the consumer thinks they need to push them over that ledge to qualify for the mortgages. So that's mortgage fraud for shelter. The other kind of end of that process is mortgage fraud for profit, where mortgage agents, mortgage brokers, and lenders might be somewhat aware that documents aren't accurate, if not outright misrepresentations, but simply put the paperwork through to get that mortgage going, knowing full well it's actually a fraudulent application, because they want their fees at the end, and it's a very sales-driven um, industry. Lastly is mortgage fraud for money laundering, and this is the startling one in that real estate is the perfect avenue to launder money. It is done slowly, methodically, using a variety of different tools. And in this particular scenario, you might get organized crime groups, other fraud threat actors that need to launder money from other criminal activities, such as it could be fentanyl distribution, it could be sex-based human trafficking, racketeering, illegal betting networks, and get that cash and then filter it into the system by whether it's a straw buyer, someone that's posing as a buyer, or a false identity, or actually real people. And they can grab that illegal cash, make down payments, and actually set up a mortgage where they're paying, every 2 weeks or weekly or whatever their mortgage is, and then hold on to that property for a period of time. And in the money laundering world, there's three ways that it can be. It's layering integration, are the biggest things. Placement is the first one. But in essence, getting that money, starting to make mortgage payments with that illegal money, making a down payment that's accepted by the lender, and 3 or 4 years down the road, the threat actors sell the house. All the money's been laundered. They might realize a profit, and that money is free to reinvest in their criminal enterprise. And those enterprises, which is probably where we lose sleep, what are those enterprises that they're continually funding? And it could be anything from national security issues, or threats to national security, to just really large core multinational threat actor groups.
Mm, fascinating. Okay, so I mean, I know you stated at the outset that it's a bit difficult to quantify. This is often the case in the crime space. You're able to quantify reasonably what you're able to seize and detect and these sorts of things. But do you have a sense of the proportions among each of these three types, and then what forms the basis for this estimation that is in fact much more significant a problem than what we're detecting?
Yeah, and I think that's the $1 million question. I don't think we know how to quantify this, because it is done in the shadows. It's very hard to detect. We don't have the resources and the people paying attention to these metrics, and more importantly, operationalizing against them to truly quantify the issue. In terms of transactionally, mortgage fraud for shelter is probably the most common. We see people fudging documents, misrepresenting income, employment, and other things. regularly. It happens every day in Canada. And that really is the cart tied to that horse is the mortgage fraud for profit, where we see these actors within the mortgage issuing process that also benefit from these falsified documents. Um, in this country, we don't have a fantastic record of operationalizing against mortgage fraud from money laundering. Our asset forfeiture regime is weak. We have very few cases that come to a criminal court, and even fewer instances where we have successful prosecution. So the outputs that we would hope to rely on, like court findings, like civil court findings, and unknowing lenders going back through civil court processes, it's so hard to quantify those.
Hmm. Very good. Yeah, and we'll get into why that is. I mean, the incentives facing, um, people in the real estate space and financial institutions are not necessarily to clamp down on these sorts of things. And of course, law enforcement, which you know inside and out, it's a highly specialized set of skills required for these sorts of things, and it's not your beat cop, your general patrol, and so the resourcing. Of these sorts of things, and on the prosecution side is a little bit difficult. Let's come back to that though, because I want to pursue this line further, Cameron, of its connection to the housing market and our housing affordability and supply challenges. Can you expand on that? Like, is this driving it? Is it just building upon some of the higher housing prices and this sort of thing? What's going on here?
Yeah, it really is a big interconnected mess. There's a cause and effect relationship right through this entire larger, I call it a larger ecosystem. So if we look at it in terms of what is driving mortgage fraud, whether it's the one of the three that we've discussed, what is driving it? And the criminal element, they're always going to drive money laundering, regardless of the economic conditions. They're threat actors and organized crime. They're very resilient, they're agile, and they will survive. But in terms of what has contributed to the rise of mortgage fraud, it really is a number of different issues. We see in certain cases in larger markets like Vancouver, Toronto, Montreal, uh, where through foreign nationals that are buying houses that are coming in and bidding above ask, inflating prices because they need to get that money into Canada. We see organized crime groups that are buying and just coming in with just bags of cash that said, we're going to get this house, where you get honest, hardworking Canadians just really don't stand a chance in those bidding processes. In that ecosystem, we're seeing the market go up, and we're seeing this unaffordability right across the country. In that, typically you look at values in, let's say, for instance, Halifax, where the cost of housing in Halifax has gone through the roof. Wonderful place. I'm actually from Halifax, but you look at all these different markets throughout Canada, but the real ones that we saw where we really saw spikes in real estate was Vancouver. Vancouver is a very expensive, and not just Vancouver, the lower mainland, Toronto, Montreal, and we see it in Calgary as well. So we see the drive in prices. So people need to, if they're hell bent on getting that mortgage, they need to adapt their information so that they qualify for this more expensive house because they're trying to keep pace. And salaries and the average income of Canadian homes has not kept pace with inflation. It has not kept pace with the rise in market. So there is this huge downward pressure where people's like, look, I need to buy a house. I have a family. We're working 2 or 3 jobs, and there's that downward pressure where they feel the necessity to do whatever they need to do to get that mortgage. Another aspect is, during the COVID-19 pandemic, and as a subject matter expert in this area, I always tell people, I said, we really need to bifurcate what we were like before the pandemic versus how we are now, because so much changed during COVID. But during COVID, if we all remember, people still needed housing. Banks and other lenders, we're somewhat digitally ready for all those channels for business. But when COVID hit and we basically all went home, they weren't digitally ready. But very shortly they were, and they had these enhanced platforms for things like mortgages. But also, we still had high rates of immigration. The double-edged sword here is Canada needs immigration. We need to staff up our workforce. We need to drive our economy. So there's no question we needed immigration. But because of COVID and the lack of affordable housing and the lack of housing, period, the numbers of available units dropped. And it just created this storm where whatever's available is very expensive. There's not enough units for people that need units, whether it's a condo, whether it's a townhouse or a detached house, or even rentals. They were just disappearing, and that really fueled what we've seen over the last number of years.
Mm. Interesting. Okay. Yeah. So types one and two of fraud more driven by the, people trying to cut corners in this really tight market, high costs and low supply, and then the foreign state actors, and transnational organized crime as well as domestic, maybe on the speculation side more so. Do you get a sense though of what the trend is here with mortgage fraud? Like how long has it been an issue? Has it really worsened just post pandemic?
A great question. So mortgage fraud it's been one of our most durable frauds. It occurs all the time. I don't think we've seen, and it's widely accepted that I don't think we've seen the such a large scope of mortgage fraud because of all these what used to be fairly disparate data points really kind of all came in and created this arguably crisis. Um, so in terms of state-sponsored actors, state actors, transnational groups, you'd mentioned speculation. That's one of their key functions of really gaining that added revenue from their investment. Yeah, it's been a real struggle, but I don't think we've seen it as bad as we have in the last, anyway, arguably 6 years ago until now, where there's still residue from COVID-19. Financial crime has exploded in general. Mortgage fraud, one of the issues, and I'm very deeply ensconced in the mortgage brokerage industry, consulting with them. They are fighting a losing battle against things like Gen AI and the creation of documents and even online interviews generated by AI. They are just grasping how they can fight these well-equipped actors that are really manipulating the system.
That's great. Well, let's get in now to the regulatory landscape, starting in particularly with our anti-money laundering and financial crime regulatory regime. You point to some weaknesses in the anti-money laundering system in Canada. Can you explain its vulnerabilities? What makes it vulnerable to exploitation?
Yeah, absolutely. So, and mortgage fraud is actually a perfect example of some of our vulnerabilities in our overall general anti-money laundering program here in Canada. It's all kind of included in the Proceeds of Crime Money Laundering and Terrorist Financing Act, or PCML-TF Act. We're terrible at naming laws. It's a
I
fairly
remember it well from government. Yeah, a lot of acronyms.
yeah, it just kind of rolls off the tongue. But one of the issues that has really hampered our overall anti-money laundering program, and it really has impact on this particular crime, is that lawyers are exempt from the act. And that was by way of a Supreme Court of Canada decision where lawyers don't have to be reporting entities in our money laundering laws. They were exempt from that. So, from an international reputational perspective, the Financial Action Task Force, or FATF, when they did our last country assessment, which I believe was 2017-ish, it was one of the biggest glaring things they mentioned in our country assessment. Like, other countries have worked with their legal communities who are gatekeepers and carved out a way where they can participate in the anti-money laundering laws. In Canada, we're one of the most private nations. We have one of the finest rules of law, and our Supreme Court made the decision. From a consulting standpoint, it's not a criticism, but it's a cause and effect relation or cause and effect issue where in mortgage fraud, lawyers are gatekeepers. They do facilitate the sales of houses. They have absolutely no reporting obligation whatsoever, unlike a lot of other jurisdictions that have been assessed by the Financial Action Task Force. The other issue is of very late, and I'm saying last year, we're seeing industries like mortgage brokers and administrators and agents, real estate brokerages and agents are now under our act. They're all required to report now. One could say, well, we wish it had happened sooner. The pace of legislative change for anti-money laundering laws has been quite brisk over the last few years. We've seen a lot of other industries pulled in, like armored cars, white label ATMs. MSBs have been there a long time. They're very high risk. So we're seeing a greater pull from FinTrack and Finance Canada to get as many entities in as possible as reporters. So the fact that they were pulled in is a really good step. It was done fairly late in the day. So the outputs from those are yet to be seen. It's an industry that's still real sizing what the regulations mean, what are our obligations, and FinTrack is building their ability to monitor these entities as well. So the fact they haven't been in a reporting regime ever and are just in as of last year or so, that was a weakness right off the bat. And as these entities come under the umbrella of the Act, we're not going to see automatic outputs of quality. They're going to be struggling to know what their obligations are. I know the industry has engaged FinTrack, and FinTrack is working very hard to guide them in terms of their reporting obligations. That was a big one. Um, and there are a number of other deficiencies within our act. One of the probably the biggest issues is, the notion of KYC, know your client. FinTrack has established a baseline of what that would look like, and it's fairly simple and straightforward. That's a great start, but in the digital age, there's a lot of innovation that can be kind of intersected with that requirement and really upskill reporting entities on truly validating identity and other things like that.
Mm-hmm, mm-hmm. Yeah, well, I believe the Financial Action Task Force that you reference is doing its report on Canada this year, and there have been some moves, as you've suggested, to yeah, remove some of the. I mean, certainly a great deal of importance to privacy, and we see this especially in the digital era, right, where identities can be stolen and information shared quite easily. But reporting and transparency requirements and having all of these carve outs, they create clear loopholes for fraudulent activity, right, and for organized crime to exploit. And one of our fellows recently did a piece for us on beneficial ownership registry, Christian Leuprecht, who I know you know well. So that's another example of a measure taken to really, I think, appropriately balance people's privacy while giving law enforcement, prosecution, and the public to a certain degree the tools they need to be able to access information and then act on it to deter fraudulent activity. So, in addition to some of these things that you've mentioned, Cameron, what are some other policy proposals that the federal government should look at, or provincial governments, local law enforcement, to really clamp down on this issue?
Yeah, so as I mentioned, KYC is really a place. It's a central part of the issue we're having with mortgage fraud. Very ripe for disruption. We have the technology to get all the actors around a table is very difficult. You'd have to engage like this Canadian Bankers Association, credit union associations, and other lenders. The heavy lifting, I think, is being done uh, at a fairly glacial pace. So that is one area where we have a lot of vendors that create these consortium data products where there's a certain anonymization. There is disruption that we could do to better equip lenders to kind of validate different things in a mortgage. The other thing is with regard to how we combat mortgage fraud and financial crime in general. And I always like to keep the two very close because there's such an entanglement there. We see so many legs sprouting out of mortgage fraud, and then other types of fraud we see going into mortgage fraud. It's just this nasty interconnected ecosystem. But one thing we lack in Canada at this point is a truly nationally positioned leader in our kind of fight against financial crime in general and mortgage fraud in particular. So, what would that look like? We've seen on budget papers, I think, for the last 3 or 4 years, the Financial Crime Agency of Canada. When it was first put on budget, I believe it sat underneath Ministry of Finance. It was given nominal money, but no real staffing. And at some point, I believe in 2.5 years ago, it was bounced over to Public Safety Canada, where arguably it would be better positioned. But that's an argument I would probably have with Christian. And then it has been bounced back to finance, but it has never actually materialized. But no one really knew what it would do. And you think of, do we have an existing national entity that could do a whole variety of things to better coordinate the Canadian response to financial crime and mortgage fraud in particular? It would have to be an agency that has law enforcement powers, has engaged all the stakeholders, has sustainable financing, and is really pulling the Canadian court system along with it, so that if we operationalize and take down these big threat actors, we can successfully prosecute them. And we haven't shown enough times that we can do that, or we have the capability. One of the ones where we did was an RCMP operation called Project Collector in Quebec. That I think at the end of the day, they'd taken down a $1 billion money laundering syndicate in Canada, and it was basically between Vancouver, Toronto, Montreal, and it was, I think, internationally regarded as one of the finest money laundering investigations we have seen in the G7 or Five Eyes in a very long time. So kudos to Canada. We can do it. We actually have the expertise and the people, but we don't have all these pieces together, and that could probably really be mitigated to substantial degrees by having this unified response with someone at top of house saying, okay, here's all the places where we need to improve, but also have a mandate to do it with pace, because our economy is going to look a little different over the next 3.5 years. We're not sure where that'll be. Fraud actors wait for governments that are strapped and can't monitor industries. So, the time really is now to create that. And the federal government hasn't done it yet. I know there's been attempts. This year is kind of a difficult unicorn year where, things are going to die on the papers, but really, we almost have to blast through that and just have this national kind of acknowledgement that regardless of who's in power, regardless if we're prorogued or an election's coming up, like, let's start this heavy lifting now, whether it's the RCMP or they rejuvenate the FCAC, whatever. But we don't have that yet. And I think that is a single most important policy change that the federal government can do. And you'd mentioned, like, provincial considerations and municipal considerations and things like that. This group, if constructed properly, would engage all those stakeholders, because everyone's waiting to get things done.
Mhm. Yeah, interesting. And I mean, one of the weaknesses for Canada is that the US has a lot more levers and focus on this sort of issue, right? And partly because they're a more attractive target, but then, in comparison with them, we're comparatively weak and therefore more attractive for organized crime to focus on. I just want to delve into this a little bit deeper, to have some experience with, joint forces, jurisdictions at different levels. And yes, like cooperation and how it's rolled out is really key and crucial. I can see the case being, quite strong for something like this because of, its transnational features and, national scope. But it has to be done right. You mentioned earlier, and I think get into this in your paper, that on the law enforcement and prosecution side, it does take significant specialized resources. So, what's the landscape now currently? Like, are there some pretty well resourced outfits in certain municipal services and parts of the country in terms of prosecution? Are they going to respond well to a national task force?
Yeah, that's a great question. So there has been, and we've kind of gone cyclically where, you look at, excuse me, federal policing. At some point, the RCMP was disbanding financial crimes units in like 2017 or 18, but they still had the expertise and they deployed them as smartly as they could. But within the federal policing directorate, within the RCMP, they have a financial crime directorate. They have a cyber crime directorate. And I always tell people, let's not say fraud, let's say financial crime, because that's cyber, fraud, money laundering. It's a big deal. And if you look at one, you're going to miss all the other investigative data points. But in every province or region in Canada, the RCMP has created these integrated market enforcement teams, which have like regional, municipal, and provincial assets that work with them. Oftentimes, they'll work with their provincial regulators like the Ontario Securities Commission, the Alberta Securities Commission, and they have this multidisciplinary approach to, it could be a market fraud, and also in a lot of jurisdictions, they have like the Serious Fraud Office, like Ontario has. The thing about operationalizing law enforcement for these huge cases is that the fraud investigator is really unlike a lot of other types of police investigators. I've been fortunate to do a lot of different things, but I noticed to get experience in financial crime as a police investigator, it takes longer and you have to get more certifications. And you don't want to send an investigator in a room or in a trial where they just don't know how certain financial cycles work. So in that vein, we saw some really good progress in provincial agencies, but also the RCMP, where they're now and have been hiring civilian investigators who are chartered accountants and who have other designations rather that really super equip them, and they're teaming them with an actual law enforcement officer. So we've seen some benefit to that where they can get into cases quicker, they have a wider scope, and there's just larger success, which is a great thing. One of the things that impacts law enforcement's ability, they can scale up all they want. They can get their designations, their certifications. They can keep these experienced officers within these specialized teams, even through promotional regimes. But then ultimately, the case is handed to a crown attorney and it goes before the courts, where the police lose control of the case. Now it's the state that's prosecuting. In Canada, we have a couple of, and in the law community, arguably critical case law decisions by the Supreme Court. One is Regina versus Stinchcombe, which in essence says any piece of information that the police collect, they must disclose to defense. I don't think anyone would argue with that one. It's all about a fair trial. But then Regina versus Jordan came in. And what we saw from the Supreme Court was if a case is in lower court, it has to be done completely in 18 months. If a case is done in superior court, it has to be done completely in 32 months. Large transnational investigations into financial crime, it is virtually impossible to get these cases done in 32 months. Where the Crown simply says, we're going to waive, we're going to simply do the legal maneuver, we're going to put it in superior court because we have more time. So, things like that really hamper. The RCMP did it with Project Collector. We saw really good outputs. They did that perfectly, but the resources it cost the RCMP and basically by default Canadian taxpayers was enormous to get that case done successfully. So there's a lot of uphill kind of walking to get this done, regardless of how well equipped police are.
Yeah, yeah, very good. Well, I can see how the need for a certain degree of centralization and leadership is needed and would be beneficial. And yeah, with respect to RV Jordan, it's certainly having ripples, major effects throughout the legal ecosystem, and it seems as though it's one of those clear cases, at least in my mind, of an overbroad standard. Because of course, administration of justice in a timely manner is important, but as you say, there are a lot of differences in types of cases, and one of the things I think the court or perhaps advocates thought in making that ruling was that this would encourage or require provincial, federal government to staff up to such a degree that courts would run really smoothly. But there are other challenges and realities that impinge upon the ability to do so. But anyway, want to delve into one more aspect of this. You mentioned, actors in the system struggling to keep pace with. I think it's fair to say just the pace of technological change. AI, all of these tools that are enabling, fraudulent activity to a greater degree. So, how do we strengthen things like borrower identification and verification during the mortgage fraud process?
No, and again, that's a great question. So, the mortgage brokerage industry is really challenged with doing that, and it has to deal with KYC solutions, consortium data, document verification, but almost saying the struggle with mortgage brokerages and people have to remember it's not just mortgage brokerages. Banks also give mortgages. So they're in this mix as well, and they have a lot more technological prowess in doing this. I mean, the ability to do due diligence in like any AML team in any bank is fantastic. But for these mortgage brokerages that are doing this, excuse me, they need the equipment, but it's almost as if we're gonna try to juggle a sales culture and get these mortgages through because it really is ultimately about customer service. With all the threat actors that we've mentioned, the vast majority of mortgages are still good. And we want to get them through, have them approved, buy their homes, and then their families are set. I think we really need to keep our eye on that. But having said that, if we can add some internal friction to that qualification process where we really build on consortium data, and you see a lot of huge vendors that are ensconced with industry associations saying, look, we can do this. And if it's one vendor, we can work with another vendor. Like part of this is a profit driven industry, but we also want our clients, the mortgage brokers, to do this right, to really limit their losses. And one thing that really struck me in a lot of my work and our work is that mortgage brokerages are very reputationally conscious. They don't want to get stuck with these nasty mortgages with a motorcycle gang or something like that. So, where is the disruption? The disruption is doing certain checks to validate identity. I heard one person talk in a forum that's like, well, that's Service Canada. Well, Service Canada is never going to release that information. So we have that issue. So these entities are left to do it on their own to try and go through other publicly available sources to validate information. I was hearing a case study where a mortgage agent had a really bad feeling about a certain mortgage and simply went on Google and put in addresses, put in a business address, things like that, and they were all bogus and really just stopped it by basically 3 minutes of keystrokes. If you can almost operationalize that and bring uniformity to these checks and balances, I think that's a start. But it really is almost in a unified disruption that leverages that consortium data where we have AI generating identities. If that has been tagged as a fraudulent application, let's keep that on file. And if they file again, another lender can see it and just say, okay, that's already been flagged as fraudulent, and they act the application. Something as simple as that. But there are a number of different other types of disruption they could do. But I always tell people it's almost detective work. Like go back to the basics. Google's a wonderful tool, or Bing, whoever. Yeah.
Yeah. There are some basic things you can do. There are some vendor solutions out there, as you suggested, and yes, there really should be the incentives for actors in the system to want to deter this for reputation. And unfortunately, it is becoming a bigger issue on more and more people's radars. So that may be the case. Otherwise, I know provincial governments are looking at uh, perhaps regulating some additional requirements, right, through the mortgage application process. Do you have any comments about that? Is that worth looking into further?
It definitely is. I mean, FISRA is fairly a proactive agency based in Ontario, and they are, not only are they, regulating things like the insurance industry, but also the mortgage the mortgage brokerage industry, but really having those robust discussions about how we can improve this. And, efforts like that within provincial regulators, we would have so much better alignment if all those provincial regulators who at varying stages, and not all are as proactive as FISRA, but having that alignment and working into a larger national strategy, I think we'd see some real wins.
Very good. Okay, final question for you, Cameron. Just looking ahead, where are the trends on this issue? Are we going to see a continued rise in fraud? Do you think it's really starting to grab the public and policymakers' attention? And it either already is starting to be addressed effectively or more of that will come? Where do you see the issue going?
So the issue is not going away. We face some very significant economic headwinds as a country. It's somewhat, these are disorienting times for Canadians for a variety of reasons. We are at risk of losing capital to the United States, potentially EU, just because of things that are being inflicted on us as a nation. That's important because it may drive a recession of some kind. There might be a recession in the United States. There might be recession in the EU or China. All the economies are so interconnected. That in and of itself is a strong driver of mortgage fraud. But more broadly, it's a huge driver of financial crime in general. So from my perspective, I don't see it dropping because I don't think we're doing enough at this point. One of the things I mentioned in my paper is we have seen some wins, but we're just not getting it right. And there's so much more that we could do. So in terms of, what are we doing right? We're starting to see greater uh, uh, shoring up of our anti-money laundering program. FATF is going to come and assess our country program, I think, in December of this year. Everyone's talking about, are they going to gray list us? Which countries are represented in the assessment team? There's all that kind of politics. there's a number of guesses of how we're going to do. We do, and I always stop people. I said, we're not the best in the world, but we do have a somewhat strong anti-money laundering program. We're not absolutely abysmal like some other nations, but there's some places like the Vancouver model with our casinos in Lower Mainland. We were a disaster, and we became known for a certain type of money laundering. But we don't have that cohesion. We don't have that alignment between all the agencies and private sector entities, government at all different levels. There's just no unified response yet. And that really is where we're going to see the wins. Whether or not we see things like that come out of the next government, we could have an election starting next week. Excuse me, next week. It's our hope in my general area that, with all the chaos of creating a new government, that this one is really important. And to give the existing government credit, they have actually tried to add as many tools as they could to our money laundering regime leading up to the FATF assessment. But we've still got a very long way to go.
Hmm. Very good. Well, thank you, Cameron. This is a very insightful discussion. And to our
Thank you.
listeners, thank you for tuning in to Inside Policy Talks. Be sure to check out Cameron's paper at the Macdonald-Laurier Institute's website for more details on this critical issue. Until next time, I'm Peter Copeland for MLI. Thanks for being here.
Thanks, Peter.